One. Matt Davio back with Philip Shaw. Philip Shaw, if many of you are unaware, is a full-time farmer and a part-time commentator on the grain markets. He's from Ontario, south of the border, if you will, from my hometown of Detroit. And most people don't know that, Philip, that Ontario is actually the first country south of the border in the U.S.
Well, that's a geographic anomaly. You can actually look directly north into the United States from Windsor, Ontario, into Detroit.
Yep.
But you and I have a lot in common, me being from southwestern Ontario and you from southeast Michigan.
Yep.
We follow a lot of the same sports teams and have a passion for Michigan football.
Michigan football, and as you said, your team is the Detroit Pistons with the new owner. We talked a little bit about that. So I'm hopeful that the new ownership will get that franchise back on track. A little bit about you, Philip. People can find you. I found you on Twitter, as I find most of my unsuspecting video and interview candidates. And your handle is at Agridome. It's hard to say. Agridome. What's the genesis of that?
Agridome. My syndicated column across the United States and Canada is called Under the Agridome. Most people don't know that now. They just think of Philip Shaw. So when I started on Twitter, I don't know, must have been over 2 years ago, I just took the handle Agridome.
Like it.
And it seems to work for me. The genesis of Agridome, probably people don't know, is there's a place in New Zealand where they show sheep, and it's called the Agridome. And so back in my earlier in my career when I wrote my column, I've done it for 25 years now, I said, let's put it under the Agridome tonight. So that's how Agridome started, and it's on Twitter, and if you want to follow me there, I'm just at Agridome.
And as you mentioned, you've been writing for 25 years, your article in Today's Farmer. Also, you do a lot of writing for DTN, which, as a lot of traders know, is a must-read in that area. You write and do a podcast, Market Trends, a monthly analysis of the corn prices for the grain farmers of Ontario. You do a number of speaking engagements and arrangements, both in Canada, and I know you're starting to leak a little bit down into the larger 48 southern states down here. But I want to talk a little bit. You're not a trader, so that's what fascinates me. You're interested in the markets, and indirectly you're a trader in that you farm and make your living and sell what you obviously grow. You've got a bachelor's and a master's in science and agricultural studies from Guelph. So you're very, what I would term, fundamentally sound, in which I know nothing. I look at the charts of things, including grains, and trade them. So let's get into it a little bit. How long have you been farming? Were you born into a farming family?
Yes, I've been farming all my life. My earliest recollection is hoeing soybeans and working in cornfields in southwestern Ontario. I've done that all my life, and then about in 1977, I went away and did a Bachelor's of Science in Agricultural Economics. Shortly after that, I went back and did a master's degree in agricultural economics and started delving in the writing, and my background is in agricultural marketing. So just more and more, I've started to delve in the commodities. I found quite a following on Twitter with people that are following me based on what I say. But I farm for a living. That's what I mainly do. It used to be a large farm in Ontario. I farm about 860 acres. It's not a large farm anymore. But I do the whole thing, so it takes a lot of work. It just so happens that everything meshes with the commodity market and the farm machinery reviews and the other things I do. With my background as an ag economist, and my practical application of what I do gives me somewhat of a little bit of a unique look into the industry.
So 360 acres, you say, is not a big farm anymore. I know that's the case in the States. Is that the same in Canada and Ontario as a province? I mean, have the farms been, the small farmer really been taken out of the picture by the conglomerates?
Yeah, I may have misspoke there. I farm 860.
Okay.
So it depends. In Western Canada, like the Northern Plains in the United States, and parts of the Western Corn Belt, you have huge expanses of acreages where you have several thousand acres where one particular person might handle that. I know in Western Canada and the Northern Plains there would be farms up to 15,000 acres and more. In the Western Corn Belt, not so much. In Ontario, not so much, where we grow more corn and soybeans and things of that nature. So in Canada, for instance, and in the Eastern Corn Belt, farms tend to be a little bit smaller, but as you go west into the Great Plains, you get farms that are much, much, much bigger, a tremendous scale. And so that's how agriculture is moving, and farms have got larger, and I don't see that changing.
I got to ask you, Jim Rogers, I'm sure you read a little bit and know who Jim Rogers, the famous trader with Soros, cut his teeth there, is always on television. He says the next generation's investment bankers will be farmers. What do you have to say about that?
I think that's all hype. I've seen that. I've also heard Warren Buffett say he'd trade all the gold in the United States for all the farmland. I've heard comments on Sirius Satellite Radio on Bloomberg that we all should quit and be farmers. I don't know if that's such a good idea. Farming is a business, but it's also a lifestyle, and sometimes it can be a very hard lifestyle. So the nature of agricultural economics, whether it's in Canada or whether in the United States, is that it's cyclical. It ebbs and flows. Sometimes you have high prices like we do now, but oftentimes you have low prices. The one constant in the industry is change. And so just because it is good now doesn't necessarily mean it's always good. And sometimes the grass looks a little bit greener on the other side of the field or other side of the fence. And sometimes I think those comments are made when you don't look at the totality of everything. I mean, I've led protest marches here in Ottawa, 10,000 farmers in front of me because of poor, hard times. Those aren't the times we're having now where we get comments like that, which make out that it's just a license to print money out here because, we deal with the elements, the biology, the weather patterns. We're dealing with that right now with the heat moving into the American Midwest, damaging corn and damaging crops. We're seeing money go out the window every day. So it's a very risk-on environment as a farmer. It can be a very rewarding existence. Lots of us, though, do a lot more than farm. For instance, I guess myself, I do a lot of writing and I do farming, but it's all mixes in together.
So agricultural economics, give us a little basis of, kind of what goes on in the serious studies there. I was an econ major at the University of Michigan, but I don't know anything again about the economics of farming. Give us a little bit of background on how maybe the structure works in the classwork and what kind of things you're focused on. Obviously, like you said, there's a lot of what's interesting and something that you said, Philip, is to me it doesn't matter what business you're in, farming, technology, automaking, they're all cyclical to some extent, and what the breadth of that cycle is always different, and they all have their own biorhythms. But I think the point you made is key, which is there's always good times and there's not so good times, and I think in every business. So what are some of the things you learned through your studies that get you through the kind of the tedium, if you will, of the biorhythm in farming?
Well, the big difference between straight economics and agricultural economics is with agricultural economics, typically you're working with nature. You're working with Mother Nature, you're working with weather, you're working with biology, and you're also working with the fact that you just can't shut production off very quickly. And so typically in the genre of agricultural economics, and I spent lots of times in economics classes with economic majors because some of the things we just took were applied, but microeconomics, macroeconomics, you and I were in the same stream.
Right.
But we can't shut production off. So, for instance, if the Ford Motor Company thinks they're making too many cars, or if Apple thinks they're making too many iPhones, they might shut down production overnight. Not so in agricultural economics. You can't shut down production like that. And you have thousands and millions of individual farmers around the globe that are producing, and they're looking at a perfectly elastic demand curve. So whatever they produce, it doesn't have any effect on price.
Right.
But collectively, it does. If there's problems with demand for cars or for widgets of any kind out there, typically in the world of economics, you'd start shutting down production and changing things, but not in agriculture. Farmers just keep producing usually,
right?
Because that's generally what we do. So over a period of time, that has led to some tremendous surpluses in the production of crops around the world and in the United States. And it's led to tremendous problems and tremendous upside in income and tremendous downside in income. Lately, with the evolution of ethanol, taking so much corn out of the U.S. Corn supply, that's changed a bit. It's added a little bit of stability into the grain complex, especially for people that produce corn. Because, not all corn goes to animal feed anymore. It goes to ethanol production in the United States and as well as Canada and other places. So agricultural economics, when you think about the economics of farming and the economics of the agricultural economy, it's different than just straight dismal science economics where you have much more control over your production process. Now, you can say, yeah, Phil, but you don't have strikes in agriculture like you might have the Ford Motor Company or GM or something like that. And that is true. Everybody has their particular characteristic that make their industry unique. Ours is generally, when you think about agricultural economics, it's the production control. Typically, it cannot be controlled very well. It all boils down to each individual production risk decision that a farmer might make, whether that's in Illinois, whether that's in Iowa, whether that's in eastern Oregon, or whether that's in the flat farm country around here where I'm from.
Right. And, you mentioned, like you said, there's all kinds of constraints and restraints that you may have, and then there's also the weather. How much does the weather change, let's say, year to year, every 2 years? Are there natural cycles that you can kind of at least begin to lean on and focus on and practice what you preach a little bit due to your history in the business?
Not necessarily. You could make the argument with global warming, and this is made a lot in the Northern Plains and in Canada, that global warming is actually helping us because it makes for a longer growing season. I remember getting off a plane once. I was speaking in Grand Prairie, Alberta. It was minus 40 degrees Celsius. I swore I saw the North Pole when I got off the plane. We needed a little bit of global warming that day. But typically, weather may be changing, and that's here nor there. It may be changing, and that's here nor there. But it's always an issue. It's always constantly variable. In the Corn Belt right now, we have real problems with heavy heat moving into the Corn Belt affecting production. We also had a really bad windstorm the other day that blew corn down from Iowa to Toledo, Ohio. These things are constant. They will always happen. We also had a tremendously wet spring growing season in the eastern Corn Belt, and what that did is delayed corn production. It delayed farmers planting corn in the eastern Corn Belt of Ohio, Michigan, eastern Indiana, Ontario, Quebec, Pennsylvania, places like that. And that has really impacted the price as we go into this year. But what we do have is technology that works for the most part, whether it's seed technology, bigger machinery technology that helps us tame the weather. For instance, I'll give you an example. I used to spread fertilizer by looking down the row and hoping I came back, trying to do this 60 feet over.
Right.
Now I use satellites. I use satellites and guidance, where a satellite sends a signal down to a receiver down to my tractor that sends me through the field and puts me just in the right spot everywhere I want to go. So I can work at night sometimes, I can work in fog, I can work in all kinds of weather. This technology is also integrated into our planters, into our combines, into computer servers. It's all there for us. So even though we can't control the weather, and that tears our hair out,
sure,
the use of technology has really helped with some of those production issues.
Fascinating. And again, that little dissertation that you just gave me sure scared the dickens out of me for wanting to become a farmer. And I've got a friend here who's now was in the technology business, cashed out, and kind of traveled around North America, Central America for the last couple of years. And now he's settled here in Central Oregon, where it's very dry, very high desert. And he's now and also a very short, probably shorter growing season. And we don't have the moisture that we had back in the Midwest where you are. It's very dry here. But he's making a go as a kind of a sustainable farming, growing a lot of lettuce, a lot of potatoes, onions, those types of things that grow well in that type of climate. And I listen to you and I listen to Charlie and I'm like, wow, this is like there's a lot. I mean, every business there's always the unknown factors as you're talking about. But to me, it seems, again, as an outsider, there's so many more unknown factors in the farming business than there are in probably any other business. And again, this is the type of thing I don't think, makes it more difficult probably maybe for people to get into that line of business, although it could be fairly lucrative. To get your 10,000 hours, the Malcolm Gladwell, to become the expert in farming is not easy to do.
No, and the one constant I have is change, and that's the one constant you can depend on in agriculture is change, because it's constantly changing. For instance, myself, I've got 860 acres of crop that's out in the field as of now. I'm not guaranteed a thing. Right. I'm not guaranteed a thing. Those guys that had their corn blown down the other day, they went from a gross revenue per acre outlook of maybe, about $1,200 an acre. They went from that in about 2 minutes down to maybe nothing. That happens sometimes. So
I've got to ask you, how do you said you don't trade. You said you're a farmer, not a trader, fundamentalist. I would say you're a fundamental analyst on what your business is all about. So how do you protect, if you're not trading, if you're not hedging, or do you hedge, how do you protect yourself under that situation? In the worst case scenario, a fire runs through, a flood runs through, the wind knocks down your crops. How do you protect yourself in that situation then?
Well, there's a couple ways. And I suppose the first way is that some people don't. Okay? In my situation and in many situations across North America, like for instance in the United States, there's a crop insurance system set up where farmers are able to buy crop insurance, where they will be able to insure against part of that loss. That $1,200 an acre that went away, they'll probably never be able to insure for all of that, but they would be able to insure for some of that. That's a government-run program. Okay. We have similar type things here in Canada. We don't think they're rich enough. Most farmers don't. They help mitigate the risk for that production loss. You can ask, well, why would governments do that? Well, governments do that because your food supply is completely taken for granted, whether it's the United States or whether it's here in Canada. I don't think people in Bend, Oregon, or Los Angeles, California, or Albuquerque, New Mexico, or Gettysburg, Pennsylvania, or Dresden, Ontario, are thinking twice tonight that there'll be something in the refrigerator. Right. Because there probably will be. Now, I know in the United States you have a system of food stamps and other things set up for people less fortunate. But generally, the American public wants their food cheap, and they take it for granted, and the American government has set up a system that helps that happen. It's somewhat similar in Canada, but of course, it's a little bit culturally different. So some of those things have been set up to mitigate production risk. The other thing you may be talking about is marketing risk or price risk. And I talk a lot about this in my writings and commentary. And typically, whenever I'm asked to speak about commodities. I give my commodity outlook for corn, wheat, and soybeans, gold and oil, and other things, how I feel about commodities. But yes, I do hedge. I don't trade, but I do hedge. I hedge through other means, whether that's cash delivery contracts, hedge to arrive contracts, all kinds of ways I try to hedge my risk. Do I do a good job? Well, I don't know. I do what I do. But there's many marketing vehicles available for me to help my production risk. Now, do I do what maybe you do? or other colleagues that I follow on Twitter do with regard to trading the markets. I think I referred to some action you were telling me about. Man, you must have ice water in your veins. No, I don't have ice water in my veins. I don't do that. Not to say I couldn't do that, but I hedge my risk in the best way I deem possible. But at the end of the day, it's just me and Mother Nature. Sometimes it works out, sometimes it doesn't.
So when you go, again, a couple questions I have around that. In the investment world, trading world, we call, everybody typically has a style or a number of ways that they like to go about trying to make money, manage the risk. As a farmer, you're a corn farmer today. Do you in the trading world, I'm trying to position this question, do you ever find yourself style drifting or going from corn to oats to wheat? Do you change what you're growing year to year? And is there a plan to do that, or do you try to stay consistent with what you know and what works?
Well, one other thing you're dealing with when you're on the land and when you're a farmer, you're dealing with soil conditions and Mother Nature. And typically, when you're growing crops, that means you have to take care of the soil and you have to rotate your crops. You have to rotate your crops because that keeps the health of the soil, and crops tend to do better when they're rotated. If you grow soybeans year after year after year after year, you will fill your soil up and your environment up with so much disease that your yields will continually go down. So typically in Iowa, a place like Iowa, they'll have a crop rotation of corn and soybeans. Other parts of the Corn Belt, they might have corn, soybeans, and wheat. In other parts of the Corn Belt, they might add sorghum to that. As you get down farther south, milo and other things, cotton, for instance. And this is constantly changes. However, it also constantly changes with the price of these commodities. For instance, cotton was as high as it's ever been since the Civil War this last winter.
Right.
Corn was very high too. All these things change.
Sugar.
And then Mother Nature comes along and they make it that you can't get your corn in. So at that point you're just left with putting soybeans in or something else in. So the science of it is you have to be a good steward with the environment. And then the economics rules in too, and sometimes there's a trade-off. So it's just not as simple as growing lettuce every year or growing soybeans every year. You have to change what you do on a crop rotation basis to increase your yields, but also to mitigate disease and give yourself, hedge your risk against those production problems.
Again, as this conversation goes on, Philip, I'm hearing layers upon layers of, I'll call them derivatives of these functions that really very, very complicated. I mean, it's, again, this is really why I wanted to get you on, because this is fascinating subject to me, because it is, I think the typical naive American, for sure, probably, as you said, just thinks the food's going to show up at the local grocer, Whole Foods, McDonald's, however it is they find their feed. And it's so complicated, and the whole King Corn movie is fascinating to me. What are your thoughts on some of these, backlashes against the corn-fed, animals, the over-cornification, I guess you will, of our food? As a corn farmer, what are your thoughts on these types of propaganda pieces that are out there?
I saw King Corn. I saw some of those. I think even Michael Moore, doesn't he have? I think he might have a documentary about some of these things. I tend to think that it's overblown. Now you can say that my bias is maybe showing through there, but the bottom line on food, not necessarily as much in the United States as it is here in Canada, but it's still in the United States is true. The American and the Canadian public take food for granted. They don't even think twice that tomorrow, in a place like the public store in Florida, there'll be food there. There'll be milk there. Or the place in California, there'll be food in the store tomorrow. The American public doesn't even think twice. You can go to a 7-Eleven store, and they'll have wieners cooking and all kinds of stuff, and it's full. Yep, they'll have all that, and it's full. And the American public and the Canadian public, they like it that way. But not only that, They take that for granted. Well, how does that happen? That happens because there's an agriculture production system in place that's based on pure economics and a whole bunch of other things that makes it happen. For instance, I spend a lot of time in Bangladesh. I've been there 4 times over the last 13 years. You think of Bangladesh, you think of people starving to death. Well, that does happen there, and there's lots of empty stomachs, but there's lots of food there, too. But it's all a question of economics. Now, in Bangladesh, everybody's thinking, what will I eat the next day? That's a big deal. Not such a big deal here in the United States or in Canada, where, for instance, you'll take the Raisin Bran out and put some milk on it, and there's food available in that grocery store. There hasn't been a point in history where there has not in a long, long, long time. So you have an agricultural policy in the United States where you want a little certain nutrition levels for the general populace. You have school lunch programs. You have all these things set up by the USDA to maintain what we have, to keep food plentiful and cheap to the consuming public. You don't have that around the world in every country. Japan is a good example. Where, the price of beef, the price of rice is astronomical compared here to the United States. But that's one country that went hungry one time, and they have their own policies set up to do it. So there's a whole lot of nuances here. But the bottom line is the American government and the Canadian government, Western governments, they want food to be, especially here in North America, they want it to be cheap and plentiful. And it is.
So I got a couple questions around that. There's obviously, we know there's a lot of subsidized, reasons that happens. There's the mass manufacturing of products, the food companies themselves. So that's a big part of it. Distribution's a big part of it. Could that change pretty quickly? As a trader, I always want to know what's my ultimate risk. How quickly, could that food and in the Walmart superstores, how quickly could that stop? And I always got, I don't want to get doomsdayish, but I think it could happen pretty quickly, and it'd probably be shockingly surprising how quick it would happen.
But at the end of the day, everybody has to eat.
Right.
At least here in North America. So I think what you'd find if something happened, it would be like the Tylenol scandal of a few years ago, where they found some caps off the Tylenol and then they took it all off the shelf. Or you had something like the Atkins diet of a few years ago, where a lot of oat products just went crazy. Everybody started eating that.
Right.
What would happen? Like, for instance, we had an issue with melamine in Chinese baby food a few years ago. Some of that being imported to the United States. I think you could be right with regard to some specific foods, some specific issues. Now, in Canada, for instance, and I know it's not this way in the United States, we have an addictive ritual every morning where everybody goes and gets a Tim Hortons coffee. In Detroit right now, they've got lots of Tim Hortons outlets. Maybe in Oregon and on the West Coast you have Starbucks. What happens if suddenly we find some carcinogenic nature for coffee the day after tomorrow, and it's really bad? Well, you'd have this huge decrease in the consumption of coffee, at least for a few days, maybe even more. That would really cause problems to companies like Starbucks and Tim Hortons here in Canada. Similar type things, we've had similar type scares in beef and pork and pepperoni and even corn-related products with regard to Starlink gene and different things that were released quite a ways ago. But at the end of the day, everybody has to eat. So I think you might see that in particular segments of the food economy, and that's something that what you were bringing up with King Corn and some of these activists that were talking about the corn economy and things like that, that's what some say, is a real problem in the food we eat. And maybe on the West Coast, you hear a little bit more about that than we do here in Southeast Michigan or Southwestern Ontario.
Right. No, but to me, it's all tightly linked. Also, not so much, even the farming as the distribution. How much of a factor is getting the food from the farmer to the manufacturer of, who's turning corn into chips or whatever it may be. There's so many factors that go on there. Is distribution in your mind, is that something that could be easily disrupted in North America?
No, I don't see that happening because the profit motive is so strong. Transportation costs are a big part of the cost of the food you eat.
Right.
For instance, if you take corn, for example, of the crop we're producing this year, 5 billion bushels is going to be used for, actually it's 5.01 is going to be used for ethanol. So you're going to burn that in your fuel. And 5% is used to feed animals. I'm sorry, 5 billion is used to feed animals. Oh my goodness, it used to be all to feed animals. And now you're putting the same amount as you're feeding animals into your car.
Are they equal? Are they equal now pretty much in North America, 50% like that?
No, it's not 50%. It's 5 billion for feed and about 5 billion for ethanol. And I had the figures here. Yeah, our usage rate now is 13.5 billion bushels. So that's 5.15 for ethanol, 5.05 for feed. Incredibly, it's the first time ethanol has overcome the feed usage for corn. The rest of it is you export some, use some for seed, you use some for milling and things of that nature, but it's significant. Now, the United States has a policy where they want to rid themselves of foreign oil. Now, you could probably tell me more about that than I could say about it. So one of the reasons that you use ethanol in your gasoline is to reduce your dependence on foreign oil.
Right.
From a Canadian perspective, we are your biggest foreign supplier of oil, and we just want to sell you more.
Right.
But typically, when you ask
which most
our American friends,
don't know, by the way, most Americans don't know that. Yeah.
That's right. They think it's Saudi Arabia and some unfriendly parts of the world, but that's the ethanol story in the United States, and it keeps growing, even though it's really running into some headwinds in Congress right now.
Do you think? So my question is, if government decided we want to use less of Canada's oil and obviously less of the Middle East's oil, could we, as a composite North America, grow more corn to achieve that? Is that doable?
No, I don't think so. I don't think I don't think it's possible, but politically in your country, I know it's politically in Canada, you wouldn't get by the dog catcher, but I mean, in your country, in the Congress, you're running into all kinds of headwinds about ethanol. People like Michael Moore, and you mentioned the documentary King Corn. There's a lot of headwinds about producing corn for ethanol versus just making food cheaper. Right. And you know more about the political situation in your country than I do, but there's a lot of headwinds.
Actually, I wasn't asking so much politically as if the politics were pushed aside and we both agreed that we want to fuel our transportation models and our heating models with ethanol instead of oil-based products, crude oil-based products. Functionally, could we do it? Could we grow enough corn to do that?
No, I don't think so. But the problem you run into is price, because it all, at the end of the day, you burn the fuel that does it the most cheaply. It just so happens in the United States they have mandates to produce biofuel up to 2022. I think it's 36 billion gallons or something. Yeah. So you have government mandates that have to be fulfilled, and they're running into big headwinds politically. But yeah, I mean, if you came up with that policy tomorrow, we're just going to fuel everything by ethanol, just like the Brazilians. Well, my goodness, everybody in Iowa and Illinois would be so happy. You know, it'd be an Independence Day. But there's a lot of headwinds with ethanol.
Of your product, then, do you find, does the typical farmer, again, and I'll just use North America, I guess it depends probably regionally, but do you find, and is this part of your marketing of your agricultural product, that you're selling some locally, some nationally, some internationally, some for ethanol? Is that the way that you kind of define and produce your maximum return and profit on your crop?
Oh, like for instance with corn, every corn producer that sells to a buyer realizes the tremendous impact that the ethanol industry has had on the price of corn.
That's it.
I mean, you're talking 5 billion bushels versus 5 billion for feed. That's unheard of.
Right.
Ethanol used to be at zero. And it's all government mandated. So typically, do I question whether I sell corn for the ethanol market versus the feed market? No, you don't think of that because it's all one big one, and it all competes for corn.
That's it.
Yeah. So
you're not, you don't specifically market yourself on the micro level. Yours is all macro. Yeah. Okay.
Well, keep in mind that a commodity is a commodity, right? It's it's not a packaged product. There's not a lot of differentiation between a bushel of corn that I might have or you might have, or that the guy in Illinois has. So a commodity is a commodity, and it goes wherever the least resistance is. It's just that right now, with ethanol, with Chinese demand for corn, I mean, there's a whole bunch of things going on in the market that is making it pop.
So I've got to ask you, you said you were over in Bangladesh and you're over in some of these emerging, countries with massive populations, much bigger than we have here in North America. Are we, is there as big a growth opportunity as everybody talks about in the exporting of this technology, especially seeding technology and the GPS and all the computers, as you said, that are exported with this technology to these emerging marketplaces? I mean, is this just a huge, huge marketplace? Can you give us some scale?
In my mind, the answer is yes, yes, and yes. I spent a lot of time in Bangladesh because I study with a colleague there, and I write a monthly column about developed versus developing economy issues. I also was able to lecture there in 2009. India, Bangladesh, China, places like that are well known, but in terms of export-related markets, especially China. But you take the export of what you talked about, technology, GPS technology, seeding, machinery, and things like that. The former Soviet Union right now is like a playground for that stuff.
That's right.
You have all kinds of American machinery companies as well as Canadian machinery companies that are exporting to Russia, Kazakhstan, the Ukraine, Belarus, where production is starting to skyrocket compared to what it used to be in Soviet times. So, for instance, you remember last summer when Russia had the big drought.
Yep.
They shut off grain exports. Well, they're starting to export grain again. And so is the Ukraine. In fact, they're thought to export so much grain that the government of Ukraine has decided to tax the exports so they can make even more money.
Wow.
So a lot of the American technology, agricultural technology, is headed over there, and it's helping them increase production. Canadian technology, too. Now, India and Bangladesh is a little different ball of wax. In Bangladesh, they have 140 million people. Tremendous economic growth. Every time I go back there, I see newer things, and I'll be beside a rickshaw going by, and then somebody will pass me in a BMW behind me. India, as you know, is going to surpass China. Export all kinds of things to North America. But Chinese demand for corn right now is starting to be unprecedented and putting another drag on the corn supply, which is helping corn prices. So, when you go over into Asia, whether it's China or whether it's India or whether it's Bangladesh, there's a different measurement on life over there. I have said during this interview already, well, Matt, we all have to eat, so somebody's got to buy it. But when you're in Asia, you realize that, well, not everybody has to eat because there's lots of empty stomachs, and it's a great challenge for a food producer to want to get as much money as they can for it. And here in North America, we burn it up in cars and trucks and ethanol. But at the same time, in parts of Asia, there are people that have empty stomachs. And, I've walked through the slums of Bangladesh, and it's heart-wrenching to me. But it is what it is. But yeah, there are lots of technology transfer that's going over there to emerging markets. You take an emerging market like, let's take Russia, for example, or Brazil. That's one thing. But when you take an emerging market like Bangladesh or Nepal or Bhutan, that's another thing. If they don't get the proper returns at the Dhaka Stock Exchange in Bangladesh, they have a protest and go in there and grab the traders. I don't think you want that to happen.
So this leads to a good question. The world is becoming smaller in all things market-related. Obviously, this affects you probably different today than it did 25 years ago and different than it did 10 years ago. how do they enter workings and correlations with currencies? Let's talk about oil as a currency. Let's talk about gold. How do all these things just factor into the already difficult, again, derivative-based nature of your commodity business? I mean, there's so many factors.
Well, there is, but to me, one of the biggest factors when it comes to commodity is the value of the U.S. dollar. Now, as a Canadian, and you probably remember back in the day, Windsor and Detroit, we'd go back and forth all the time. And as a Canadian, you'd wonder what the value of the U.S. dollar was.
Right.
But I don't think the American, the good friend, the American, was sitting there wondering what the value of the U.S. dollar was when he was, eating a hot dog at Michigan Stadium watching a game, and the
right.
U.S. dollar was the U.S. dollar. But I'd be looking at the same hot dog, and I'd say, well, it cost me $1.30 Canadian. I'd be thinking about the value of the dollar.
Yep.
The Canadian dollar just happens to be higher than the U.S. dollar now, but that's here nor there. But the U.S. dollar, the value of the U.S. dollar has a huge effect on the value of commodities. And we saw the U.S. dollar, well, it went way down today, and we had this huge update. Yeah, we had this huge update in commodities. Mm-hmm. Because the United States has a great advantage. They have the world's default currency. And despite what the Chinese say, and despite what the Russians say, and despite what a lot of people say, I don't see that really changing. And when the world's commodities are priced in U.S. dollars, when the U.S. dollar goes down, that means more commodities can be sold.
Right.
And that's the basic rule. And, and so as a farmer, he likes to see the U.S. dollar at a lower level, so commodity prices go up. It might cost him a little bit more in the United States. It just so happens in Canada, typically the Canadian dollar will go down when the U.S. dollar goes up, and vice versa. You've seen this with gold. You've seen this with oil. You've seen this with a lot of things, the way the U.S. dollar affects things. I think that is one of the singular measures that people should think about when they're thinking about commodities.
I agree with you. I mean, I've been really talking about it probably more so the last 6 months than any time in my 20 years in this business. It's so micro-focused on the dollar right now and all commodities, and even, the correlation of lower dollar means typically, again, higher stock market. That's been working. But at some point, but what's funny about that, Philip, and I think you would agree with this, is usually you want you really do want a stronger dollar if you want to have stronger markets, because at some point, higher commodity costs, lead to pressure to the consumer, obviously, and inflation and all those things and the bad things that come along with that. So it's a fine balance that's being, played right now, and it's really kind of a bizarre world where the financial markets go up. The job market really hasn't changed stateside. I don't know what it's like in Ontario, but I know, I was back in Detroit about a year ago, and growing up there in the 70s, it was never that bad even in the 70s. It really felt tough, really tough in the southeastern Michigan area. So, well, I'm just wondering at some point, that strong dollar policy, which they really want the dollar down, as you suggested, because it makes profits better for the corporations. But ultimately, it ends up squeezing the consumer, the real economy, which is the jobs and everything. So it's a strange time. It's a strange time. Well,
and not only that, but in the United States right now, I mean, when Mr. Obama came in, you had TARP, you had QE1, QE2, and now U.S. Federal Reserve Chairman Ben Bernanke's talking about QE3. Yeah. So essentially what that is an infusion of capital into the markets, printing money essentially, which is bad for the value of the U.S. dollar.
Right.
And that started yesterday, and we saw what that did today. And it has sent commodities up. And I write about Ben Bernanke a lot. Yeah. People think, geez, don't you have a life? Don't you write? I mean, I get a fascination out of, if he blinks the wrong way, people interpret that a certain way. But he has tremendous power, the U.S. Federal Reserve, on what they're doing. And just right now, with all these quantitative easing events, it has put pressure on the dollar. And that's good for commodities. If you think about it, the U.S. dollar has went down about 40% against the Canadian dollar in the last 10 years. In some ways, that's a 40% pay cut for you.
Yep.
And a 40% increase for me.
Right.
But did you feel anything different?
Well, here's why, and you're absolutely right. I know exactly where you're going. And the reason why I haven't felt anything different is because, again, naive Americans don't travel outside of this, their four walls, I guess. Whereas most of the rest of the world does. And you come here and you feel it. If I went to your country, I definitely feel it because, like you said, when I grew up, I remember going over to Canada at times and I'd get $1.60 loony for every dollar I'd bring into that country. And as a 19-year-old going over to Windsor, gosh, $10, I could drink all night, right? I mean,
I won't ask what else went on to Windsor. We got a lot of our American friends coming over there, but it's true. And now you come over, they only give you 95 cents.
Right.
So, I mean, but anyway, for instance, you may have not felt the 40% pay cut you had on the world stage, but for me, when I go to your country or I go other places, I feel it.
Yeah.
And
absolutely.
when I buy American technology, whether it's a car, whether
iPod.
It's a tractor, iPod, I feel it.
Yes.
Okay, I feel it. Now, having said that, with the world's default currency, that gives you certain advantages because in some ways it's almost advantageous that you don't feel it.
Yeah.
That's a stretch, but I mean, your government has a fiscal policy where they do certain things based on that, and the populace is happy. But the U.S. dollar that's a quintessential measurement for commodities.
Yeah, it really is. And I continue to tell people as a trader, that's the number one key I will focus on every morning is the dollar moving up or down? And then it's so much, it drives oil. So it's even more so than oil for you right now also. And I would say probably at one point, 70s and 80s, oil was probably more important.
I agree. It's interesting because I do a lot of public speaking up here talking about the commodities. And typically, we get a lot of my American friends that get invited up here and do the same thing. And invariably, when my American colleagues who talk about commodities come up here, they'll put a graph up and say the Canadian dollar is all related to price oil. And I just don't drink that Kool-Aid. To me, the Canadian dollar is all related to the value of the U.S. dollar, and that's how it is determined.
Well, as I say it every day on the Twitter feed, just about probably drive away a lot of viewers, but follow the dollar. Whatever the dollar does, commodities will do the opposite, and in essence, financials will do the opposite. So it's pretty simple correlation right now.
Yeah.
I got a couple of trades.
That's not.
Go ahead.
That may change, but it may take 50 years for it to have it happen.
Yeah, so you and I have that in common. There's all types of dynamics and change going on in markets, and that's what gets me going and keeps me, getting at this game every day. I'm sure it's same as it is as a farmer. Like you said, it's always changing, and you have to accept the change and be good with it. That's the hardest thing.
Change is a constant.
It is. And when it's not going to be fun anymore, by the way. When I got to ask you a little bit about some of the trading reports. Most of the grain reports, do you favor them being released, the agricultural reports, during trading hours or after? As a non-trader.
I was just at the Chicago Board of Trade last week in Chicago, and I had the opportunity to talk with some CME people, and I asked them that exactly. I don't know the answer to that question. I think it would probably be better if they announced it during trade, because frankly there is time for chicanery when they're released before. I'm sure you've seen the movie Trading Places with Eddie Murphy and Dan Aykroyd.
Yeah, orange juice.
I use the frozen concentrated orange juice example in a real estate course that I teach here in Ontario. I have my esteemed colleague at DTN, Darren Newsom, and I have a lot of respect for. He doesn't put a lot of credence in USDA reports, and I know why, because he's a great technical analyst that he can kind of read the market to know what's happening. But I like to write right after USDA reports for the grain farmers of Ontario, partially because USDA reports serve as flashpoints for the market. And sometimes they're huge, like on July 12th, June 30th, January 10th, March 31st, every year. They're huge. So they serve as flashpoints, and they generally tend to have big market moves.
Right.
So if you release these reports during trading hours, it might be just as violent, the moves, like in trading places.
Right.
But it might be a little bit better of a seamless transition.
Yeah, I'm kind of more of I think all things should be done during open markets for the same word. I like your word, chicanery. There's more opportunity for it to go on when markets are closed. So I agree with you. I mean, I tend to agree. If you believe in the free market system, then let the market squelch it out, up, down, sideways. It doesn't matter. It'll be crazy for a few minutes, but let it be crazy. And that's why we have traders. I think that's what makes again.
Yeah, I think when we use the term free market a little loosely, post 2008, to me at least, that has a little bit of a different meaning because of what went on in 2008 with Lehman Brothers and others. It has a little bit different meaning to me now.
Expound on that a little bit. Expand, if you would, rather, because I think, because I agree with you. It's not the same.
Well, it's obvious that in 2008, with the some of the financial products that were packaged and resold, which were basically bad mortgages, that I think Edward Greenspan said it was a financial tsunami. And then I used to love listening to him, and then he came on after it was all over, maybe last year, and said he never saw it coming, and he just couldn't believe it. The bottom line is that the free market? Yes, it was the free market. And I don't feel that I should comment on, like to you as an American friend, about the free American market. I can only comment on Canada, where we have a lot more regulation in our market. I'm way on that side. I think that the free market left unabated to himself will get us what got us in 2008, which caused a lot of heartache. I remember very clearly listening to Bloomberg Radio on my Sirius satellite radio on my tractor shortly after that, and the lady called up a show and she said, "Do you mean my Lehman Brothers bond is no good no more?" And I almost drove into the ditch. I thought, oh my goodness. But here's a lady that probably had $2,000 and boom, just vaporized just like that. Yeah. And so, the free market is what it is, but it's not the panacea, unregulated, that many of us thought it was. But like I say, I don't feel right commenting on that to my American friends, especially being a Canadian.
Fair enough. Agricultural markets are, they're 24 hours, but do you really think they should be completely 24-hour markets? They trade 24, but they close, 3 or 4 times also. So, do you think they should trade more like the financials and more like oil around the clock, since it is a world market now?
Yes, I believe that. And I think we're going that way. And like, for instance, I was in Chicago last week, and I was at the CME, and I saw all the trading being done, and I'm well aware of Globex and all the others. I just think it makes sense that it's going to go that way, and I have no issue with that. Yeah. In some ways, it'd be even more seamless. However, it would probably depend on who was going to be making the money and how much money could be made, and who knows. But yes, I would agree with that. I think that agricultural markets should go that way. I did ask last week when I was in Chicago about the competition for the CME group, and really I don't think there is much. Like you have Kansas City wheat, Minneapolis wheat. Like for what you trade in, yeah, there's lots of competition. But I was thinking about ag commodities. There's not a lot of competition for that.
No.
But yeah, I would think 24-hour trading would be good.
why don't we open up our own little exchange then? Maybe we start our own competitive exchange.
Well, never thought of that. It's always a good idea, isn't it?
There is. So another question, ETFs, agricultural, there's an ETF for everything. I mean, Jesus, I didn't even know there was the coffee ETF until the other day, Java, JVA. So we've got Moo, DBA, and a couple of the other different ETFs. Any thoughts on these exchange-traded funds in the commodity space?
They're huge. And I didn't hardly knew what an ETF was a couple years ago, but this managed money in the commodity market, the ETFs for almost anything, it is a major focus in agricultural commodities as well as commodities as a whole. And when you see these funds moving, it is like a wolf pack. Like you can see money going into energies, back into ag commodities, into softs, into metals. And to me, it has changed the way we price agricultural products at the cash level. And that's probably a different topic for maybe a different genre.
Sure.
I get in a little bit of trouble here when we have agricultural futures prices, and we have also something called basis levels. I tend to think of flat prices as being king now in farm country. Some people have a hard time getting around on that. But because of the movement of capital, commodity markets have become so volatile now, because of ETFs and the managed money moving around, that it makes it very difficult to price things for the ordinary producer.
Do you think that, with that in mind, I guess kind of a secondary question, do you think that the large speculators have an outsized influence then on the overall markets now?
Do I think they have an outsized influence? No, I don't think it's, maybe we're talking about semantic. They have a huge influence, so maybe outsized, maybe they do. But, they're good people, right?
I'm not trying to get you to cross a line here, so it's not my intent. I guess what I'm asking is maybe it's more of a question of liquidity. Do you think, due to the size of the money that's moving in and out of these markets because of these new players, I guess, in this space, and I think you kind of already answered it, but it's maybe having an indirect and direct influence on the way the prices move right now. And I think that's always, it's much like a small cap stock or an emerging company, that they're much more volatile maybe in their younger years, and then they kind of settle into a more normalcy of, price.
I like the liquidity. I think they add tremendous liquidity to the market. And what I meant by these people are good people was, when I first started learning about this and managed futures, ETFs, and managed money, I thought, well, who are these people? Because you tend to get demonized in the agricultural discord. And so on Twitter, a lot of these people started following me, and I finally said, hello, let's have a coffee. Yeah. And I was able to meet with, David Stendhal is one of the people I met on the way to Louisville, and who is a CTA. He works in managed futures. And it was a great meeting, because here I was as a producer of agricultural commodities, and he's a CTA, and somebody like yourself where you meet together. But I think you produce great liquidity, and I have no issue with it. The big issue is in the agricultural environment is to get all the farmers on the ground to realize what's happening in the commodity markets, because it's not like it used to be. But with all the managed money and all the ETFs, it's a whole different volatile world, much more volatile than they are ever used to. And if you've been taught that through the years, like I was taught it many years ago, it's a whole different ballgame now, especially when you think about the managed money, the ETFs, and the commodity market.
Well, Philip, listen, I've taken enough of your time for our first chat here. I definitely want to encourage you to maybe come on again when you're free and you're not traveling around the world doing what you do, because I think it's fascinating and something I know I could learn a great deal more, and hopefully our viewers are seeing the same thing. So I want to thank you for your time today. Again, Philip Shaw with 1L, philipshaw.ca. You can find his website. That pretty much links to all his podcasts, his writing, and speaking engagements that he's involved in. You're a very busy guy, along with running an 860-acre farm. So I appreciate you taking the time this afternoon to do it.
Well, thanks very much. It has been a pleasure. Anytime you want to talk grain specifics, you just track me down.
I will do it. I appreciate it. Thanks, Philip.